SNDL is not just your average cannabis company, it has changed, it has grown. The company has boldly expanded its operations. Now it includes a significant liquor retail business and a substantial investment arm. All this, alongside its original cannabis operations. Based in Canada, SNDL is making strategic moves. These moves aim to build a more resilient enterprise. It's a conscious effort to diversify. This diversification is truly key to understanding SNDL today. It's about creating stability in a volatile sector. The company has a notable market presence, especially within Canada. SNDL operates a large network of retail stores. This network serves customers of both cannabis and liquor. You might know some of their brands. Brands like Value Buds and Spirit Leaf for cannabis, and Wine & Beyond, Liquor Depot, and Ace Liquor for alcohol. Beyond retail, SNDL is also involved in cannabis cultivation and the production of various cannabis products. This creates a multifaceted operational footprint. It allows SNDL to reach a wide array of consumers across different markets. Why this transformation? The cannabis market is notoriously challenging. It's filled with regulatory hurdles and intense competition. So, SNDL's diversification strategy is designed to spread risk. It aims to secure more consistent and predictable revenue streams. The liquor retail segment, for example, generally offers more stability, more than the often turbulent cannabis sector. Meanwhile, its investment portfolio presents opportunities for financial growth and strategic partnerships within the industry. This is a carefully considered strategic shift by management. The ultimate goal is enhanced profitability. Investors are watching SNDL very closely. As a publicly traded entity, its stock, SNDL, is scrutinized. Every financial report and strategic announcement matters. The company also began trading on the Canadian Securities Exchange, CSE. This happened in April 2025. This move was likely aimed at improving market visibility, or perhaps it sought to enhance trading liquidity for its shares. Ultimately, SNDL's complex strategy must deliver tangible results. The focus remains firmly on creating and increasing shareholder value. The market waits to see if these bold bets pay off. Let's look at the numbers. Revenue is a good starting point. For the full fiscal year 2024, SNDL's net revenue reached $920.4 million. This represents a modest increase of 1.3% compared to the previous year. In the fourth quarter of 2024, net revenue was $257.7 million. That's a healthier 3.7% rise year over year. So, what does this tell us? It shows that SNDL is still growing its top-line sales. Even if that growth isn't explosive, the trajectory is upwards. The company continues to generate more income. This indicates some ongoing market traction for its varied businesses. Now let's consider profitability, specifically at the gross level. The news here is quite positive. SNDL's gross profit for the full year 2024 was $240.3 million. This was a significant jump of 26.2% from the prior year. Consequently, the gross margin improved substantially. It reached 26.1%, an increase of 5.2 percentage points. For the fourth quarter, gross profit stood at $68.8 million. This was up by 20.0% year over year, and the Q4 gross margin was a strong 26.7%. This improvement means SNDL is becoming more efficient. It's making more profit on each dollar of sales before factoring in operating expenses. However, operating losses remain a significant concern for investors. The company reported an operating loss of $103.8 million for the full year 2024. The fourth quarter alone saw an operating loss of $76.1 million. These are substantial figures that cannot be ignored. It's important to note that the Q4 results included some very large, exceptional items. These one-time charges totaled $81.3 million. They included a $65.7 million valuation adjustment on its Sunstream investment portfolio, and a $15.0 million impairment related to its Spirit Leaf retail brand. These items heavily impacted the bottom line. The cash flow situation offers a more nuanced, partly brighter picture. For the full year 2024, cash flow from operations was positive. It came in at $23.3 million. However, the fourth quarter saw a negative operating cash flow. This was $44.6 million. The company stated this was impacted by the Nova acquisition costs and by significant share repurchase activities during the quarter. Despite this Q4 dip in operating cash, free cash flow remained positive. It was $8.9 million for the full year, and an impressive $11.6 million in Q4 2024 alone. Generating free cash is vital. SNDL has been active on the acquisition front. These are key strategic moves. The company successfully privatized Cannabis Inc. This move consolidates and strengthens SNDL's cannabis retail segment. Furthermore, SNDL acquired Indiva Inc. This particular acquisition is very significant. It positions SNDL as the largest manufacturer of infused cannabis edibles in Canada. The impact was immediate. Indiva contributed $7.5 million in net revenue. This was in just the last 2 months of Q4 2024. These acquisitions clearly aim to expand market share. They also broaden SNDL's operational capabilities. The company's investment portfolio is another crucial part of its strategy. As of December 31, 2024, this portfolio was valued at $449.1 million. A major component is its investment in Sunstream Bancorp Inc. This was valued at $413.1 million. However, the investment segment recorded an operating loss in Q4 2024. The loss was $63.7 million. This was largely driven by that $65.7 million valuation adjustment on the Sunstream portfolio. This adjustment was partly attributed to Florida's negative vote on adult-use cannabis at the time. SNDL also made a strategic investment by acquiring shares in High Tide Inc., another cannabis company. Regulatory developments and market expansion are also top of mind for SNDL. A very important breakthrough occurred in Florida. SNDL received approval from the Florida Department of Health. This was for the transfer of the Parallel Certerra Holdings Inc. license. This gives SNDL a crucial foothold. It's an entry into the burgeoning U.S. cannabis market. This market represents a potentially vast area for future growth. As mentioned, the company also completed its listing on the Canadian Securities Exchange. This took place in April 2025 as planned. This new listing could offer benefits, such as reaching a wider pool of investors, or fostering improved trading dynamics. Returning value directly to its shareholders is another stated priority. SNDL has maintained an active share repurchase program. Throughout 2024, the company bought back 10,764,107 of its common shares. The average price paid was $1.81 per share. In Q4 2024 alone, 5,002,372 shares were repurchased. The average price then was $1.84 per share. This buyback activity continued into early 2025. An additional 5,761,735 shares were repurchased in January and February 2025. Such programs often suggest that management believes its stock is undervalued. It can also help boost earnings per share over time. Looking forward, SNDL has laid out some ambitious future targets. The company has set a very clear financial goal. It is aiming to generate $100 million in positive annual free cash flow. This is a significant objective. They plan to achieve this within the next 3 years. That time frame points to the end of 2027 or early 2028. This serves as a major benchmark for the company. Investors will undoubtedly be tracking progress towards this target very closely. Reaching this level of free cash flow would be a powerful demonstration, a true sign of financial strength and sustainability. To achieve these goals, SNDL's focus is multi-pronged. The company intends to pursue continued investment in growth opportunities. The new Florida license, for instance, opens doors. It allows for potential expansion into the U.S. cannabis market. Operational efficiencies are also a critical area of focus. Management is actively working to optimize costs within its liquor retail segment. It is also implementing restructuring programs. These are designed to reduce corporate overheads. All these efforts are geared towards boosting overall profitability and ultimately enhancing long-term shareholder value. This is the core strategy. Examining the performance of SNDL's different business segments provides further insight. The liquor retail segment saw a slight decrease in net revenue. However, its operating income showed strong growth. This was attributed to effective data licensing, pricing strategies, and cost optimization. The cannabis retail segment reported increased net revenue. Same-store sales also grew, which is a positive indicator. Though its operating income was hit by an impairment charge, The cannabis operations segment, which includes cultivation and Indiva, posted a healthy increase in net revenue. This diversified model clearly has different parts moving at different speeds. So, what should investors be watching for going forward? Progress on that $100 million free cash flow target is paramount. The successful integration of recent acquisitions like Nova and Indiva is also key. Will these additions deliver the expected synergies and profit contributions? The performance of the Sunstream investment portfolio warrants close attention. Can its valuation recover from the recent write-down? And critically, what will SNDL do with its Florida license? Any further concrete steps into the U.S. market will be heavily scrutinized. The overarching theme for investors is the journey towards consistent, sustainable profitability.